We also have Redington that actually reported its numbers. No doubt the stock is seeing some sort of a pressure in trade today. You've seen the PAT decline by about 1.2% on a year-on-year basis. You have the revenue that's come in higher by about 2.6%. Margins a tad bit lower on a year-on-year basis. So let's bring on the management to understand what exactly happened in the quarter gone by, why such a performance coming in. No doubt, key to note that the stock has seen a good recovery from the day's lowest point as we speak. We have Mr. V.S. Hariharan, who is the Group CEO at Redington, joining us on the show. A very good morning to you, sir. Thank you so much for joining on ET Now. And let's talk about your earnings and what transpired in the quarter gone by for your company, especially when you talk about the margin, the profit, as well as your EBITDA. They've come in lower, no doubt. Your revenue on a year-on-year basis have come in higher. What has actually contributed in the quarter gone by?
Okay, thank you for having me at the show. Give a flavor to the performance this quarter. Overall, this quarter has been an improvement over the last few quarters sequentially. If you see on profit where we started the year, we are at 1.45% PAT. It's sequentially improved. We had the best quarter ever for Q4 and the highest revenue for the year as well. Let me talk a little bit about specifically what happened in the quarter. We are largely in three theaters. We are in India and South Asia as one theater. Middle East, Africa is another theater, and Turkey is a third theater. And between these theaters, India contributed significantly with a 9% growth year on year. Within Middle East, Africa, we have Saudi Arabia, UAE, and Africa. We had very good growth in Saudi Arabia at 15%. And where the stress points were really Africa. Some of the countries in Africa, like Nigeria and Egypt, the currency fluctuations in the market created a dampening in terms of both market conditions and our ability to operate in terms of maximizing revenue versus taking risks. So we really went after profitable revenues, and so Africa slowed down a bit for us. Same with Turkey. Within Turkey, there is a inflationary environment and a high interest rate environment. So we were quite clear to operate cautiously in both Turkey and Africa, and that slowed us down a little bit. But we are very confident the way things look and what we have done in India, Saudi, and UAE, and added to that as things bottom out in these other markets, the outlook looks positive.
Hi, very good morning, Mr. Hariharan. This is Shrishti also joining in. You did mention that the India business has performed really well. So going forward, do you believe that India will outperform the rest of the geographies? You mentioned that the Africa didn't perform that well for you. And also in the India business, do you see any change in your in the mix of the clientele that you have and the kind of clients that you hold in your portfolio, the vendor revenue mix I'm talking about?
So first of all, I just share the four business units we have. We operate largely between mobility as one group, the endpoint solutions, which is the PCs and printers in one group, and the technology solutions in the cloud. Clearly, cloud is growing the fastest for us, and we overall at a global level we do $1 billion on subscription-based sales and revenue, and that will continue to be very strong in India and overseas. Within India, we also see, though we've had some temporary softness because of the elections and delays in corporate buying and government buying the last quarter and this coming quarter, we do expect that to pick up over the course of the quarter. And during the course of the year, we are seeing a lot of announcements coming up, AI-enabled PCs and smartphones. So we expect the refresh cycles will really start catching up on both the PCs and phones. And so we see those bullishness also in the second half of the year as we see more AI-enabled devices coming out. So we do see a good balanced growth. Clearly, cloud will continue to be a larger growth part of it, even though it's a small portion of the mix, and to be getting to be a larger portion of the mix, but all of these four categories will grow.
Mr. Hariharan, let's talk about what sort of an outlook that you have coming in for the margins as well as your expansion plans going ahead that you can share with us for FY25 or maybe for the years ahead that you all have already penciled in.
So margins will largely be stable. If you look at our gross margins pre-COVID to COVID times, it went up because supply was chasing demand. So where we are on a margin level, we don't expect a lot of change. It will continue to be stable. In terms of expansion plans, there are a number of geos in the emerging markets that we play in. Clearly, we are trying to expand into. For example, we play in South Asia, in Asia, and Southeast Asia. We want to expand in these markets with cloud offerings. Within Africa, we find South Africa is a lot more stable, so we are venturing into there. Saudi Arabia, we are trying to grow faster. Just like India, it offers a lot of possibilities for growth. And adjacent to Turkey, we have Central Asian markets. Again, that's another area we're trying to grow. So within the emerging geography space, we are really trying to grow some of the adjacent geographies around us. In terms of product portfolio and brand portfolio, clearly we're trying to add a lot more brands in the cloud subscription space and areas of platform as a service or software as a service, and you'll see a lot more work there. We also got our cloud platform and our ecosystem we are building around cloud. So the subscription business is an area that will grow a lot fast for us, driven by the whole movement of customers to cloud. AI is another area we clearly see is a growth area for us, the AI-enabled devices and software.
All right, Mr. Hariharan, with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping us understand what all is happening within the company right now. What is the outlook related to different divisions, geographies, and more. Wishing you all the best for the upcoming earnings. So that was the management of Redington sharing their outlook in the times ahead. If you like this video, then like, share, and subscribe to ET Now.